I wrote the book to sort of to provide it from an investment angle of this is how the asset class, like this is kind of an overall description of the asset class. This is why it's important. And these are the mechanisms, the financial mechanisms of why it can be so successful. And the long-term leases are the primary reason why this asset class is so successful.
Hey everyone, welcome back to another episode of the Book More Show. It's Stuart Bell here, and today I'm joined by Trisha Talbot. Trisha, how are you doing?
I'm doing well, thank you. Thanks for having me.
Pleasure. I'm excited to share this journey with people. It's as we get a chance to share author stories with people, I think it does hopefully it does a couple of services for people. One, it kind of reminds them that, hey, this is something that they should do as well. But two, it really kind of highlights the different paths and approaches that people bring to the project. We've all got the same outcome of trying to start conversations with people, and we're using books as that mechanism. But how we each get to that point, or the steps we take through the process, it's unique for each individual person. So I'm excited to share your journey. So why don't we start at the beginning and give people a bit of background about who you are and the organization?
Sure. My name is Trisha Talbot, and my company is Doc Properties. It's a healthcare real estate investment and advisory firm. So I'm coming out of the brokerage side of the business, having about 20 years of experience doing every type of transaction, but specifically I'd say 90% in healthcare properties. And I really like the asset class for a few reasons. One, because I feel like the buildings and the facilities serve a great purpose. People, even though telemedicine has started to develop, it's not going to replace inpatient visits. There's, I think, remote monitoring and stuff like that are going to enhance healthcare services. But any critical care, any chronic care, and any examinations or procedures always have to be done inside a facility. And so those facilities serve a need and a purpose that I think is good for society. So that sort of drives me to want to stay in the asset class. And then, real estate, there has to be investors in order to have those facilities. And so I think it's a great investment for people, and for people that are looking to have impact investing or purposeful investing in something that is going to impact others. I think it's a great way to, not only have a mechanism to grow your capital, but also a mechanism to impact people in a real way.
It's interesting, isn't it? Because you think about telemedicine and the all of the heat and light that's around moving things to remote, but the opportunity that it opens up is these facilities now are going to be dealing with a smaller volume of people. They don't have to serve quite such a broad purpose. They can really niche down to provide the specific care for the type of person that's coming in without having to worry about catering to all those people who are covered by telemedicine and that first stage kind of triaging. So it makes it a real the use case or the usefulness or the job of work, the purpose of those facilities can become much more targeted because they don't have to be so broad. And that seems like it's an opportunity both for better customer experiences, but also for investors to really dial in and anchor into that the value that those particular types of buildings are providing.
Yeah, I mean, it benefits the whole healthcare ecosystem in a very big way. So not only what you're talking about, but people in like rural communities, to have an initial triage over Zoom or whatever the platform is, and maybe some follow-ups, or if they have one conversation and there needs to be other conversations with some specialists to really try to dive down, so that when they do have to drive to an hour and a half to a facility, they more or less know exactly what they're going in for, instead of having to go 4 or 5 times
Right.
for some tests that may or may not be needed. I mean, healthcare, the industry itself is just plagued with, being astronomically more expensive. Insurance companies are pushing back. Physicians are realizing less on the reimbursement side, but that's not keeping up with inflation, and so all of their other costs are going up. And patients themselves, now that they're burdening a lot of the costs of the healthcare system, they really want it to be specific and precise. And it's also good for the medical community, because there's a lot of things that can get taken care of before you get to like a really high-end specialist that doesn't see patients that are, and I say this just not a waste of their time, but that shouldn't be seeing them, that they should be seeing somebody else. And so all of these medical care clinicians, they can really operate at the top of their license and specific to what they're doing, and that makes them better at what they do as well. So I think it's a small part of a bigger ecosystem in there. And obviously this is the real estate is this fixed asset, but if you think about the ecosystem that it serves, I think these facilities can be really specialized, like to your point. And when people come in, they get exactly what they need. They have the right practitioners in there to serve them. And, and it saves everybody cost and time, which is, valuable.
Yeah. Your clients in this relationship, are they on the real estate side? They're either the investors or the property owners, or are they the practices and the practice managers who are kind of kitting out and looking for the right facilities? Are you dealing on both sides, or dealing with
Yeah,
one
so I
group
work
particularly?
with both. So I work with so the co-investors that I work with, I do have a lot that are physicians. They tend to have a high net worth, and they like to have a mechanism to continue to grow their capital. And this is an easy asset for them to understand. They they invest in a variety of things, but this is something that they can sort of sink their teeth in and really understand. So I think it's easy for them. But I do have just investors that are interested in real estate investing, and this is one asset class that they invest in.
It's interesting. We often talk about niching down and addressing that single target market as if you're talking to the one perfect client.
Right.
But it's really it's a reminder that the world is full of huge niches that are very specific enough. And as people are thinking about writing a book for their business, and there's always this fear that I don't want to miss out on people by being too specific. But the idea of a real estate investment area that's specifically looking at medical properties, as an outsider, you'd think that that was very specific and unique, but your experience and the clients you work with, this is a huge business that just within this particular discipline is more than big enough to support a business in its own right. So this idea of dialing down and being specific, it allows you to talk the language, speak to the people at a level that they're comfortable and convenient with. Was that the case from the start? Did the business start out specifically with medical properties, or did you dial that niche in over time?
I worked some office, but mostly I found the medical office more interesting. I felt I was helping the clients better. They're these busy practicing physicians, and they want somebody to advocate for them. They need to understand the decisions and the financial impact. They have to have space that needs to be in a way that they can, that's a work that also has the not only like the basic functionality, but allows for their practice workflow to optimize. So having those conversations and solving all those problems made my day more interesting than just the traditional office users that need a couple private offices that are in a room, in a conference room, and bullpen area. So it's just a personal preference.
Yeah. And when you find that niche and it resonates and you kind of naturally tend towards that group of people, it's almost self-selecting in a way.
Yeah.
The investors that you're working with, their motivations, there's the return on investment, which everyone, I guess, kind of thinks of as the initial thing that they're interested in. But as you've worked with them over time, that kind of superficial or surface level interest? Does that go deeper into, you talked about some of the psychological, not psychological, the preference benefits of wanting to work in this industry because of its stability, and then the giving or the doing good element of working in this industry? The investors that you're working with, has there been that level of more deeper connection, or their motivations above and beyond just this is a good asset class to be in?
So then that's probably more my motivation and why I keep doing it. But obviously the numbers always have to make sense for, and you're not going to get people to invest, just on an idea and a hope, and nobody should. But that's kind of the reason why I put this book together, is because, that's why I do it. That's my why. But, and obviously at the end of the day, that translates into finding good investments that, it's a win-win for everybody. But, the book I wrote because, it's not going to win any Nobel Prizes, but it's a basic introductory to what is a medical office asset, why is it so valuable, and people that and it can talk to both parties. So when clinicians sometimes want to occupy or invest in a building when they're an owner user, over the course of my career, I've had, very sophisticated clinicians that are very well versed in it, and then some that come to the table just saying, hey, you know what, I'm a physician and I'm a really good practice and I should get like the lowest lease rate, and I only want to do like 3 years, and oh yeah, I want the landlord to build out the entire space, which is like
Right.
$500,000, and I don't want to put any skin in the game. And there's a reason why that can't happen. I mean, the landlord just has to say no. I mean, there's no way that makes sense. And because most of them have debt and then also other investment partners,
Yeah.
that doesn't work. And so I wrote the book to provide it from an investment angle of, this is how the asset class, like this is kind of an overall description of the asset class. This is why it's important. And these are the mechanisms, the financial mechanisms of why it can be so successful. And the long-term leases are the primary reason why this asset class is so successful. And in turn, the landlord can fund a significant amount of tenant improvements because of the lease terms, and the lease rates are a little bit higher than like traditional office. I mean, they're not as high, I would say, as sometimes retail, but they are a little bit higher to account for that. And they're mostly triple net. So those operating expenses get passed on to the tenant, and that's better for both parties, because in medical, there's different practices that use different levels of electricity, and it's not necessarily fair if
Right.
one is a super high user for the other tenants to pay for that. And then also each practice seems to, in my experience, have their own particular preferences for cleanliness. And so then, triple net also allows them to, hire their own janitorial company. So there's a lot of reasons that that's a good thing. But for investors, in the book, I kind of explain why these mechanisms are the way they are, and how it, adds to the value of a medical office building asset. And I do it in a high enough level where, it just sort of gives them an overview. It's a really quick read. And I intended for it to be that way. I'm in the process of finishing recording it, so to be on audio as well. And I think at some point, on video. But I wanted to be able to say, here's the mechanisms of how to look for a good medical office asset. Like what are the mechanics of it? So when then, down the road, but I hope that it encourages people to give me a call and, be interested in hopefully investing in properties that I find. And then it will be easier for them to understand when I'm explaining why the asset is valuable, what financial aspects of it make sense for a good investment. And then hopefully, this book will give them a little bit of enough education where, they can understand what they're investing in, which is the goal. I mean, you don't want to invest in something you don't understand, and you shouldn't. So this, I think, at least gives them enough information where then, the additional questions that they have, it will help them finish their due diligence.
It's such a great point. I was just on a call with someone before we recorded today, and making the point or sowing the seed of the idea that the book, the product of the book, the outcome of the book, the job of work is to start that conversation.
Right.
It's not a college textbook. You're not trying to educate people in the complete how to do it yourself, because for most of us, that's not practical. I mean, the likelihood of someone taking all of the steps themselves is pretty much zero. So the opportunity of the book is to either introduce a new idea to someone who is familiar with investing but hasn't thought about medical as a specific niche, or if they have, then highlight two or three of the key elements of it that can make it a more successful project than another. But the outcome is always a conversation with someone. Now, as you say, hopefully that someone is you. And the book is a great way of identifying who those people might be in order to keep the conversation going.
Right.
But the outcome, the product, the job of work is that conversation. And to write something that is a accessible introduction that gives people enough value and creates that sense of reciprocity or relationship building that translates into a phone call, it's that's the real difference maker. And I think the point that you said at the end is also a key one that often gets overlooked. It's this idea that when people do then eventually reach out and you have that call, the conversation that you're having with them is informed by the information that they've already read and consumed. So at least you know they've got even if they just look at the table of contents, there's still some key
Right.
signposts in there. At least they've got some level of understanding. And then if you're saying things, or as you're saying things that echo the words that they read in the book, kind of subconsciously, it's not the first time they're hearing it. You're reinforcing
Right.
something that they already believe. So it really does. This idea of an introductory start to the conversation, I think, is the best way of thinking about books. Um,
Absolutely. And you know, for it's also, for investors too that are maybe familiar with investing in real estate but haven't really ventured into medical office. And and for both target markets of mine, I've just gotten the question so many times, like, so what is so special about medical office? Why is that important? And what makes it so different? And it's, obviously I have two sentences, but it doesn't really, it wouldn't, so my two sentences aren't going to make somebody write a check. Um,
right.
so and I think this dives into it a little bit more. And, for those that are familiar with real estate investing, or those that are familiar with the healthcare industry, it sort of brings both of them together to understand why this is an important asset class. And both from, I start with describing how it relates to the healthcare industry, but then also, but it does have to have, it is a commercial real estate property. So it has to have certain financial fundamentals in order to be
Right.
successful.
And highlighting those elements for people, particularly in this arena where people, even if they don't have a very good understanding, a lot of people have got a good reckon or think they know what the area is. So you're not introducing a brand new idea. It's the nuance of this as a subset, of all of the properties you could choose. Here are some really unique elements to this as an asset class, separate from the other commercial elements. So I think it makes it then easier to highlight a couple of those key takeaways and those key difference makers in property selection or investment selection. You can really identify a couple of things that are building on real estate investing as a general topic. So
Right.
it does allow you to move that conversation a little bit faster
Mhm.
towards positioning you as the expert, because you've got this niche understanding. And like we said at the start, putting it in a way that is accessible and friendly and the introductory level, because no one wants to read anything where they feel made to feel stupid or that they're
No, yeah, it's not an
sniffing.
investment book, and it would be unfair to, even kind of describe like, I mean, I could describe other investments that have been successful, but I didn't want to do that because I didn't want it to be numbers heavy and
Right.
super investment jargon heavy, because then people start to tune out and they close it, and then
Yeah.
to pick it up. Um, and so, and I think people like to see numbers easy, like on one sheet of paper, and be able to understand it. And trying to put it in a book over various chapters where somebody feels like they have to sit down and take notes or open up a spreadsheet to understand what you're saying wasn't the point. And every single property is different. I mean, there's
Right.
no property that's the same. Two properties can't occupy the same space just in, by physics. So,
Yeah.
there's absolutely no property investment that would be the same. So it would be unfair to really sort of say, okay, you can talk about other successful ones, but I really wanted to stay away from that in this book anyway.
Yeah, because again, the job of work of it is to encourage people to reach out and call, because that's that's going to make a difference for them, having a tailored conversation to their requirements and their area and their specifications and the
Right.
deals that are available today and not the
Exactly.
deals that were available yesterday. Yeah.
Exactly.
You talked at the start about the different formats for the book, so trying to make it as accessible as possible in terms of an audio version and video versions. This idea of the book being the jumping off point of the conversation, but then it's people are either ready today or not today, and that not today might be tomorrow or it might be in
Right.
10 years' time. So this idea of keeping people engaged, have you, is there anything set up in place at the moment, or have you thought about that in terms of, okay, once someone's requested a copy of the book, I know that not everyone's going to call me straight away. So what information do I have? What reinforcing or amplifying elements are there that I can share with people over the long run that keeps them engaged?
Yeah, so the book is free to download, the electronic copy, and so I'll give my email at the end. The landing page is just gotten finished, so I can email them the landing page, but it asks them for their email and phone number, and then they'll get another, they'll be brought through to the download. And so once I get their email and phone number, I'm going to call them, and just
Mm,
introduce myself, thank them for being interested in my book, and just offering myself to answer any questions once they finish the book. So to make that connection. And then I have a monthly newsletter that I send out. I send out one for clinician owners and one for just investors. They're welcome to sign up for both, but the information is a little bit tailored. So I send that out. And then, I periodically I'll send out like some educational marketing materials. I try not to spam people's email. I know that I think the marketing professionals would say that I have to send something out every week, and maybe I should, but I just feel like my clients are very busy. And when they get 200
right.
emails in their email, they just start randomly deleting, and it doesn't, they don't read it. So I think monthly has seemed to work. My unsubscribes have gone way down. And I think that's because my emails they're not spamming their system, and they're pretty informative and easy to read. Like the newsletter sometimes that I get, that it's almost like you have to sit down and kind of like read a book. Again, I'm trying to think that nobody has time these days and want to do that. So I keep mine very, light on words, big on pictures, and lots of places that they can click to depending on what they're interested in. So I keep them engaged that way. And, as I have properties to invest in, if they're part of my community, then, and depending on what they're interested in, because then I ask them if they are interested in investments, then they have another form to fill out to tell me a little bit more about what specific type and price range. And so I try to be very specific and targeted in my
Yeah.
marketing.
The right message at the right time. It's such a difficult balance. As you say, a lot of people recommend just keep going. I think it's Dan Kennedy, like the Dan Kennedy approach. It's something like the 5-star prospects on the list of 5-star prospects, regardless. And anyone who isn't a 5-star prospect, they're a waste of time anyway. So you might as well just keep hammering and hammering and people will self-select. But that's a very aggressive approach, and particularly with the
Yeah.
long burn, the long time frame of this type of investment, it's not a checkout purchase where you just hit a button and you can buy whenever. This is built on relationships and trying to find the right deal. It could be a multi-year approach. So
It's a
that,
multi-year approach, and it involves a ton of trust. And once they trust you and they've invested with you one time and it's successful, they trust you again. And so I
yeah,
don't take that lightly, and I don't need 1,000 investors.
right,
I need investors that believe in the product type, that trust me enough. I mean, their money is retirement money, or it's savings, or it's generational wealth that they're trying to preserve their capital. So, they're all investing for I think a personal reason, at least, the people that I've been talking to. Um, and so, I take the relationships. I'd rather have hundreds of intentional relationships than thousands of unintentional relationships. I guess that would be a
right.
good way.
I think particularly the nature of the clients that you're working with, it's a high ticket item that,
Mhm.
as you say, the numbers have to work. But above and beyond that, it's the trust and the relationship that the person's got, that you're the right person to manage and put together the deal. Not it's unlikely that it's going to happen without having a phone call or a
Yeah.
conversation. It's not just wiring some money
Someone
to
sends me a check and I don't know who they are. That would be weird.
yeah,
So I would be finding out who they are pretty quick,
yeah.
because
Yeah. Both
that's
peace of mind and KYC requirements.
right. That's my due diligence. I do need to know who you are too.
Right. Yeah. Yeah. Likewise, if a suitcase of money turns up, you're going to ask some questions there.
Yeah, if a suitcase
um,
of unmarked bills shows up, yeah,
yeah.
it's gonna be tough.
My
And
brother, I've mentioned it before on the show. My brother's a yacht broker. So obviously they're dealing with high-end clients. And at the one end of the
yeah,
spectrum, there's kind of lucky losing tire kickers. And at the other end of the spectrum, there's kind of the long-term relationships to get to a sale. But I often think that he has to do a certain amount of due diligence as well, both from the lucky loo side of it and not spending too much time on people who are just really um, not in the right place. But then from the other side as well, this is quite a lot of money, and you must see the same where people's assets come from. It can get quite complicated. Like moving all the things and combining them together. There's a certain amount of due diligence just to make sure that you don't fall the wrong side of
well,
some
there's
later
there's a lot
investigation.
of yeah, I mean, there's a lot of fraud, and so you have to be
Right.
conscious of that. I don't need that in my life. And they're doing, now if you're a small business, you have to report who you are, and the beneficial owners, and their wire fraud is on the rise, and there's all of these anti-terrorist clauses and things like that. And so
Yeah.
yeah, you gotta follow the money and make sure it's coming from the right place.
Yeah. Again, another reason why starting the conversation with the book that leads to the people who are interested in the subject and then following through with the material that you're putting out, it's all relationship building over the long term. So those names on the list that you become familiar with and the emails over time, as that builds into a relationship that ends in a transaction, it all helps to give that certainty that you are dealing with a real person with a real situation at the other
Absolutely.
end. Yeah.
Yeah.
Um, the ideal clients, we were talking briefly about the people who you work with, and some of them are investors and some of them are on the medical side. The ideal person, what am I trying to say? The ideal person within that group, do they have certain characteristics? Is this likely to be their first deal, or are they seasoned investors, or are they more often than not owner operators? Or talk to me a little bit about who
Well,
the
they need to
ideal
be
person is.
accredited investors. So
Okay.
they have typically hit they're if they are employed, they're high net earners. So if not, then they are just high net worth individuals. But so they have to they if they are employed, they're usually, I mean, I think they're mid to late careerists. But I don't think
Yeah.
I think early careerists would probably invest in properties um, that their practice owns, as a way, I think that's the way they would do it. Um, but they're high net worth individuals of some sort. To be accredited investors is the
Yeah.
term. Good.
Yeah. Interesting, actually. I never really thought that because commercial, residential real estate, you don't really think about people having to be accredited. So that the extra caveat. Understanding things like that, though, as I'm thinking about people listening to the show, there's some people who fall into that category, and this might be a market for them that they haven't necessarily had access to before because they haven't known a person. But then for other people who don't meet that criteria, just the assessment that you've gone through and the understanding of who the clients are. So writing it at a level, writing the book and then reaching out to audiences at the level who are accredited. This idea of beneficial constraints, this narrowing the scope of what you're doing. So understanding who it's not for is almost as important as understanding who it is for, because it
Right.
just helps in the creation process.
Right.
I imagine there's a line between it's easy to find yourself going off on a slight tangent and talking to groups of people who aren't the target audience. In your case, it might be non-accredited, but that would be an easy line to see. But even where the line's a little bit not as explicit as that, it's easy to talk off on a tangent. So having this idea of beneficial constraints where you really know, okay, I'm talking to this person in this scenario, probably coming from this position, it just makes the whole creation process a lot easier. Did you notice that as you were bringing it together? What was included and what wasn't included was clear in your mind?
Yeah, so I didn't particularly address the high net worth accredited investor in this particular in the book. And it doesn't. I mean, if you're interested in the asset class, I mean, there's different ways to become an accredited investor. You know, you can create LLCs and you can pool money, and you know,
Mm.
there's different ways to get there if you're really driven to do it. But you know, I remember when I was early in my career and I sat down with a financial advisor and you're like looking at what you're going to do for retirement and you're like, okay, well, obviously stocks and bonds over the long term, yes, yes, yes. But I said, what is investments in a 3 to 5 year investment horizon that you can make
Right,
money at that beats the stock market? And he was like, well, that's the $1 million question that everybody asks. So everyone has different buckets or should have different buckets of money. And 3 to 5 years, stock market, for people that like stocks, they like stocks. I understand real estate. I mean, I understand stocks, but I find it more interesting to understand a piece of real estate from the
right,
role, again, personal preference. Um, and I enjoy the stock and bond market, but that's a very long-term one. And, while I'm, I got a long runway left and I really like getting in there and understanding these, turning properties around and, selling them for more than you buy them for and really adding a lot of value. Um, so with that, it's always been like, well, what do you invest in for a 3 to 5 year time horizon? And it really goes to, you have to find private investments, but that can be also risky. I mean, I've heard horror stories of people, investing with others that, they are either like hit with so many fees that, the investor doesn't make any money
right,
and then they never do it again. So the private market, I think it has a ton of wonderful opportunities, but I mean, it's like you have to look at 1,000 deals to find like maybe 5 that work.
right,
Because it's not just the investment part, it is also um, the person behind it. So a couple of things is one, I wanted to introduce myself a little bit, but then also introduce the asset class. And for people that aren't accredited investors yet, they can very well be in any given, maybe next year. So it's more to educate people about the investing in the asset class so that they can be educated. And if it's not now, it can be later. So it didn't really, in the book, it's not just, it doesn't really talk about the type of investor. It's really more about why is this asset class valuable?
right. And that's such a great point as well, actually, because this idea of not sifting and sorting, there's a there's a low cost of acquisition of people who are interested in the book, and therefore you're able to get names and email addresses. So there's no need to try and filter at this stage, because just as you said, the person it might not be their time today, either because they're busy doing other things or they're not yet accredited. But 6 months, 12 months, 3 years down the track, that relationship has been built from today. So no need to sift and sort. There's no additional cost of having those people on the list. It's
Yeah.
just all upside to build a relationship.
Yeah, and then if they get on my email list and they, do read my emails, they'll get to know me a little bit more. In all of my emails, I took the advice of somebody to add a little bit of a personal snippet. I've never really done that before, and
Right.
I'm like, who cares about my personal life? Um, but people, I think, when they're investing with you, they kind of want to know who you are and what your values are. So it's just like one paragraph and like a photo of some recent activity of some sort. But so if they get my emails, they will get to know me a little bit.
Yeah.
Um, and I think that's important because I think you really want to you want to spend your money based on your values, I think, um, for a lot of people. And so so again, like I said, the financial asset that you're investing in is just one part of the puzzle. It's also who are you investing with? And
Yeah.
because that's as important as, am I going to get my money back, which is the $1 million question? Um, and am I going to make money on that? So all of that goes hand in hand.
It's interesting. In the last couple of weeks, it was one of those things where you kind of tune into something and then you start seeing it everywhere. But the personal elements, my natural position is the same. Who cares? Just crack on and let's do the work. But it's definite that people build a rapport. And when I think about the podcasts I listen to, or the YouTube channels, or the books I read, or the people that you follow, there is a certain sense of relationship there, even if it's very one-sided.
Right.
But even though when I talk about it, I undervalue those things. I think in my own experience, I do value them, and it's probably, we obviously encourage people to put stories and anecdotes and examples in the books to illustrate them, as mentioned before, but including some of the personal stuff. I wonder, actually, on the landing page, you were talking about going from the landing page to the thank you page, including a video on that page with hey, thanks for downloading a copy of the book. It's one of the key points I really wanted to get across is X, Y, and Z, but it puts your face there and puts a real person to it. That might be an interesting thing to
Yeah.
add there. Yeah.
Yeah. Well, there's a reason why People Magazine is, incredibly successful.
Right. Yeah, yeah, yeah. Um, Time always goes fast on these podcasts. I think I
I
wrap up
know.
every one by saying it goes so quick. Um, I want to make sure that people can find out more about what you do. I know the landing page isn't up just as we're recording, but where's a good place to point people so that they can find out more?
Yeah, it'll be up in just a few days, and unfortunately, it's like it's a perfect storm because my website's being redone and like the landing page and everything. So the easiest way, just email me, Trisha T Talbot, TTALBOT at docproperties.com. I'm very fast on email, so I'll send you the landing page right away as soon as I get it. I am not instant, but I would say within 24 hours or so, I would send it to you. So just email me. I think that's the simplest. T Talbot, TTALBOT at Doc Properties. My website is docproperties.com, and it will be it's up. There is one up, but there'll be a new one up fairly soon. And from there, there'll be a link directly to the book from the webpage.
Fantastic. Well, I'll make sure that we put, so I think we're recording on a Wednesday, I think. So we'll put this up the following Friday. So by that point, some things might have changed. But either way, recommend that people go across and take a look at what you're doing. I'll put links to all of these in the show notes. So as people are listening on podcast players, there'll be a link in the show notes. Or if people follow the email through to the website, we'll make sure that all of the links are there. And then if you're up for it, it'd be great to reconnect or get you back on the show in a few months and then see
Love
how it's
to.
landing,
Yeah.
what feedback people are giving, and then from your own perspective as well, the different ways that you're now using it once it's out there and in the world.
Yeah, no, I would love that. That's great. Thank you. Thanks for having me again, Stuart.
Perfect. No, real pleasure. It's one of the highlights of the week is getting to share people's stories with everyone else because, again, I mean, subconsciously, I hope it kind of reminds someone, oh yeah, I've been meaning to do this for a while. Today's the day that I should get around to it. But also just the opening up people's minds to this idea of amplifying your message, of sharing your message out there. A book or another piece of content doesn't have to be absolutely unique. It doesn't have to be War and Peace.
Yeah.
People are desperate for making those connections with the people that they can learn to know, like, and trust. And if they can find trusted advisors or people in certain spaces, you can be in the medical property side of things, someone else is going to be in the veterinarian side, someone else is going to be in the accounting side, someone else can be in the book marketing side. So
Right.
yeah, just put it out there, and it doesn't have to be difficult.
Well, and I think, you never know until you try. So, I think what
Right.
happens, you're this professional and you're going and going, and you're like, and then all of a sudden people are starting to say, wow, you really know a lot of stuff. And you're like, I guess I do. And and then you start having the same conversations. You're like, maybe I should just write this down and bring it to meetings and people can read it or send it before a meeting.
Right.
Get some of those initial questions out, just so that when they come, they'll have even more informed questions that
Yeah.
really we can sink our teeth into and dive a little bit deeper than staying at the surface. So,
Yeah.
and
It,
you don't know until you try. And a book like this, I think it's like 60 pages. I think you can get really disciplined and write a little bit every week and you get it done before you know it.
yeah, yeah, yeah. There's that Mike Tyson saying everyone's got a plan until they get punched in the face. The flip side of that is put things out there in the world, because you never know what's going to resonate and take off. So
Absolutely.
um thanks for your time. This has really been a pleasure. Everyone listening, check out the show notes for links through to Trisha's website, and to get a copy of the book if this resonates with you. This has been really great. Thanks again, and then we'll circle
Yeah.
back in a couple of months and check in and see how things are going.
Wonderful. Thank you.
Thanks, Trisha. Thanks, everyone. We will catch you in the next one.